Morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we are seeing here potentially is the beginning of a band ride lower. You're getting violent rallies, but you're getting lower lows. Okay, it's very similar to October of 2014. You make new lows, bulls rally it, people cover, you come up, but then ultimately that rally is sold. We are earlier this morning we were as much as 40 handles below the mid band. Well, 37 handles below the mid band, 40 handles below the weekly pivot. We were unable to get back above the monthly pivot last night after it failed in the 79 area. And you can be long the rallies. I've said this for years. You can be long the rallies. Be long the rallies. Don't get in too early, because by the time it's getting ready to actually rally, you're going to be stopped out and left at the station. But so how do you do that? It's going to continue to make lows during the down times. What you have to do is find a higher low. This morning, we traded to 57. We pushed back to 58.5. We made a high up at 67.25. And then we came back down and we did 58.5 again. So the 58.75 to 58.5 area had established itself potentially as a higher low. So now you know where your risk is. Your risk is 57. That's your risk marker. Okay, and if 58.5 to 58.75 is holding up, you can get involved in a trade in the 59s knowing that 57 is your risk marker. That's defined risk. That's how you find a low and you trade it from the long side. Throwing contracts at something, saying, well, I can't go any lower, that's a way to just get nuked in this market. Don't do that. Be patient. Make the market show you. Okay? With regard to the rally cells, same thing. You got to be patient. When the thing is ramping up and everybody and their mom is covering, you have to be patient. As you get into key areas, if it continues to cooperate with key areas like the daily pivot, like the monthly pivot, like our proprietary levels, those are areas you can lean on as risk in order to find an area to sell. I just wrote this in my room. I said the two-handle stop crowd is chum for the sharks today. It's absolutely true. This is not a small account, small stop tape. This thing is very violent. It's moving in big chunks. If you're a new trader, I would suggest you just stand aside and watch the carnage in both directions until things kind of normalize a little bit. Okay, especially if you're out there trading this stuff by yourself. Okay, so what am I looking for? I'm looking for a morning high in RTH that's likely to fail, and I'm looking to see what kind of a pushback we get towards the 57 area. 57 may be the low of the day, and it doesn't really matter. The bears have already done the job that they need to do. They've interacted with the lower band. They've interacted with the third standard deviation lower band, and they've made a lower low. The only thing the bears have to do today is not trade above 94. So that's a manageable task. They've screwed that up in the past, but we'll see how they do with it today. All right, everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I say it every day, and people that come in, they like what they see. They tend to stay. If this is something that you do every day, I'd really encourage you to come on in and see what we're all about. I will be back tomorrow morning with another webcast. Trade them well, everybody.